Welcome back to Stock Market Analyzer channel. My name is Mike, and today we're talking about, is the Fed cutting rates? The Federal Reserve controls one of the most important numbers in the entire economy, interest rates. And right now, investors are asking the same question. Will the Fed cut rates this year? The answer could have a massive impact on stocks, real estate, bonds, crypto, and even your savings account. So let's break down what the Fed is watching and whether rate cuts are actually coming. First, let's understand why the Fed cuts rates. When interest rates fall, borrowing becomes cheaper. Businesses can invest more, consumers can spend more, and financial markets often react positively. That's why Wall Street pays so much attention to every Fed meeting. Right now, the biggest factor influencing the Fed is inflation. The Fed's target is 2% inflation. While inflation has fallen significantly from its peak, many policymakers still believe inflation remains too high and could prove stubborn. If you're enjoying this economic analysis, make sure to hit the like button, subscribe to the channel, and turn on all notifications so you never miss future market updates and stock breakdowns. Recent comments from Federal Reserve officials suggest they remain cautious about cutting rates too quickly. The second major factor is the labor market. As long as employment remains strong and unemployment stays relatively low, the Fed has less pressure to cut rates. Recent jobs data came in stronger than expected, showing continued resilience in the U.S. economy. That has caused some economists to push back their expectations for future rate cuts. Now let's talk about what could force the Fed to cut rates. If inflation continues falling toward 2%, if unemployment begins rising, or if economic growth slows significantly, then the Fed could decide that lower rates are needed to support the economy. On the other hand, if inflation remains elevated and the economy stays strong, the Fed may decide to keep rates higher for longer. In my opinion, the Fed is likely to remain extremely data-dependent. At the moment, stronger than expected economic data makes aggressive rate cuts less likely in the near term. The Fed appears focused on making sure inflation is fully under control before easing policy further. So what do you think? Will the Fed cut rates this year, or will interest rates stay higher for longer? Let me know in the comments below. Thanks for watching. Don't forget to like, subscribe, and turn on all notifications for more analysis and videos. See you next time.